All right, traders ended up having an amazing day today. The portfolio was up over 13%, going 4 for 5 scalping SPY, mainly focused on call options during the FOMC meeting. With that being said, I'm going to be recapping the trades towards the end of this video, but I want to put the focus on how to trade the best setups at the best prices heading into tomorrow. So sometimes I'll have a very strong point of view for the following day, and other times I'll be more on the sidelines focus, waiting to see how we react at key make it or break it levels. So I am going to say this: I do have a stronger opinion on being bullish into the rest of this week. I'm more long biased. I am more bullish. That doesn't mean that I'm going to be buying calls. If it, the key make it or break it level reacts bearish, it's forming resistance, it's struggling, the volume isn't coming in, then I will not be interested in buying calls, right? It doesn't matter what I think. What matters is how the market reacts to what I'm thinking at the key make it or break it levels. So I am going to be explaining to you on why I'm leaning towards bullish, and I am going to be showing you what would need to happen for me to take this bullish thesis and buy call options. I'm also going to be walking you through the other side of the trade, right? I'm going to show you when to be bearish as well. So let's get straight into this. I'm going to be going over my top 3 option plays as well. I've given you guys some great plays throughout the past couple of videos. Tesla, what did I tell you guys about Tesla? For those of you who have been watching the videos, I clearly stated there's a small gap. It is a 10-cent gap that nobody has really pointed out at $213.10. I had stated, even if it cracks 213.10, we will likely see a reversal in between the bottom of this wick at $211.74 to $209. As you could see, Tesla filled the gap. There was a gap to fill at 213.10. Today's the day where it ended up filling. And once it filled that gap, it had an overreaction right before filling, overreactions to the downside, had a nice gap close reversal, rocketed all the way up to 220. So in terms of my top option plays, that was a phenomenal gap close reversal, and it can still be in the process of continuing to have that gap close reversal to the further upside to then fill the gaps that are waiting to fill above. My top 3 plays that I'm going to be watching are going to be Tesla, Snow, and I'm going to keep an eye on AMD. My favorite one is really Tesla, and I'm going to keep a close eye on Snow and AMD as well. So make sure you stay to the end of this video. We're going to be going over those. But first things first, let's start off with the SPY. So for the past 3 days, you really have to ask yourself, what has been printing? What has been making people who are buying put options the most money with the littlest risk involved? And what has been making people who are buying the call options with the littlest risk involved, right? With the biggest rewards. So the answer is very, very simple. We've been choppy and we've been in a channel for pretty much 3 days at the most. As you could see, whenever in terms of when have calls printed and when was the best time to my God, when was the best time to be buying calls? The best time to be buying calls was at the dips, and not only the dips, when it reached for lower lows, right? So if you just look at this channel, you could see right here in terms of support, your support was at $357.71. Whenever SPY put in a lower low, it would rip right back up, right? So buying the dips on the lower lows is what has been printing. That's one example. You could see right here, you have more support at 356 towards the new lower lows, and it ended up retracing back towards those lower lows at 355.71, and then boom, calls exploded, right? And then in terms of today out of the past 3 days was the only day where we didn't see lower lows. Now, we did see some lower highs. We saw some lower highs at 360, but we did not see the lower lows in terms of the SPY. So that could be one reason on why to be overall bullish. It stopped putting in lower lows, but it is still putting in lower highs. Now, this is the main reason as well. So that gives me one reason to be bullish heading into tomorrow. Now, another reason why I'm bullish heading into tomorrow is because of how stocks close. So if you look at the SPY closed weak towards the lows and it closed red. But if you look at a lot of strong blue chip stocks, a lot of strong companies like, AMD, Tesla, they closed green, right? So what I'm currently thinking is, I'm thinking we're seeing a delayed reaction. I'm looking at the daily charts of Tesla. I'm looking at the daily charts of AMD. I'm looking at the daily charts of Snow. Everything's at key support. We have very nice green bullish trend reversal candlesticks. And these have all been beaten down drastically for the short term being, and they're having their first green days while the SPY cannot close green. So my theory is this can be a delayed reaction, where stocks are beginning to see a micro bounce to scalp calls for a potential breakout, and the SPY is going to be following, just slightly behind, right? So my theory is, if stocks are breaking out, if stocks are looking strong into tomorrow, I personally think the SPY is really going to start to take off. As you could see, a lot of great stocks have closed green while the SPY did not close green. However, during extended hours trading session, here we go. And this is that delayed move that I'm talking about. The SPY is moving up. It's moving up 1 point as of now. It closed at 356.56. We are now at 357.63. So that's what I believe can be occurring right now. For this idea and for this thesis to actually work, what is it that we need to see in terms of proof? So these are the two things that I want you to focus on. First of all, we need to see previous closing prices on bullish companies like Tesla reacting as a support level. That's what we need to be seeing. And this is what I want you to understand about the SPY. This is the true make it or break it level. And the calls have been printing the past 3 days when the SPY has been putting in lower lows, or when it's at key support slightly above lower lows, like today. It was key support slightly above lower lows, right? So understand, that's what's printing on the call side. Now, we're going to go back to our key make or break it level. It's going to be a zone now, not just one level. This is your support. Your support, we're going to call 356.56. That is your support. For SPY to remain overall bullish to flip bullish for the micro, it needs to stay above this to have a super bullish day tomorrow. Now, once we can go above 357.67, the SPY has big upside potential to this $360 level. That's your next resistance level. So right now, we are in a make it or break it zone. And that zone is going to be the previous closing price, today's closing price, 356.56. And the resistance level is going to be 357.70. It's like a 1 point zone, right? For true strength, the bulls need to stay above previous closing price, and they need to break above and turn 357.70 into support. If that occurs, we will rock it to 360, which would be the profit take zone on that trade, because we have a lot of heavy resistance at 360. If 360 fails to break out, we go back down to the next level, which is that 357.70. If 360 turns into support and it's, starting to break out looking bullish, we go to the next resistance level at 361. Next level above that would be 361. Now, we need to be discussing put options now. So obviously, we're in a bear market and put options are printing, but you need to be focusing on puts when we are at key major resistance levels, when SPY has gaps that are waiting to fill below, not when SPY is just sitting at the bottom of a 355 channel for 3 days in a row, chopping, attempting to rip back up. You have to ask yourself, when are the puts printing and when are the puts getting destroyed? So if you look right here in terms of this 3-day channel, puts are getting destroyed when SPY goes back to this mid 350 level, when it's reaching for lower lows or when it's at the lower lows, right? So today it was at the lower lows. It no longer reached for new lower lows like it did the past 2 days in a row. So that's when the puts are getting destroyed, when it's reaching for lower lows or when it's at those lower lows in terms of today, because it's trying to have that bullish reversal flipped in attempts. Now, when have the puts been absolutely printing? The puts have been printing at key resistance at the lower highs. SPY's been consistently forming lower highs. It's been consistently turning some higher support levels into resistance levels, but it's failing to turn the bottom of this channel into a resistance level. It's failing to break down. And whenever it tries to break down, it ends up rocketing back up, back up, back up, back up, back up for a nice squeeze. So as someone who loves buying puts, you don't want to try to predict when this 355 is going to crash. And even if 355 does crack, I genuinely believe it's going to recover just as fast as it went up, and it's going to bottom at 350 likely, if not for 350. Again, I'm speaking for the micro, the short-term price action for scalpers who get in and get out. And my risk is like 1 point on the SPY, and a 1 point move against me is my risk, and I'm doing at-the-money contracts, typically with the closest expiration, right? Now, with that being said, I'm not trying to predict a crack, right? So the whole bearish thesis would be, for true strength, it needs to go under 356.56. It cannot break above this 357.70. If it does, this thing is seriously going to SPY is seriously going to try to squeeze to this 360 if that occurs. So the bearish thesis is, for true strength, it needs to stay under 356.56. If the previous closing price reacts as a resistance, then it will attempt to crack 355. If 355 cracks, we will see a sharp move to 353 unlikely for 350 in my opinion, but if it goes to 350 or 353, I think it's going to rip right back up. I think it'll be one of those situations where if that occurs, then that sharp downfall will simply spike, right? So that's the whole bearish thesis. Now, am I interested in that bearish thesis at those levels, right? If it's looking bearish at 357, if it's looking bearish at 356, 355, am I interested? Not really. I'm not really interested in trying to make money hoping for a key breakdown with small downside potential where I genuinely believe it's going to recover anyways. I'm not really interested in fighting the bottom of a channel with the gap to fill above. You know, at some point this channel could crack. Now that doesn't mean that puts are going to print, and puts are going to be expensive anyways, and there's not going to be as much downside potential because it's that key make it or break it support, and it's just not as attractive because I genuinely believe even if it cracks, it's going to rip back up at the key 353, if not 350. There will be a very nice rip like this in my opinion. So puts at these levels aren't attractive to me even if it reacts bearish. So that's what I want to bring awareness to, right? I could be bearish, I could be short biased, but that doesn't mean that I'm going to buy put options, because what I'm looking for is what's going to print me money? What has the highest reward with the littlest risk involved? And in terms of this 3-day channel, it's playing this overall channel. So I'm going to say this: if you want to play puts, instead of trying to predict that it's going to crack, or instead of trying to buy into the lows when it looks bearish, when it could just flip back to bullish, who cares if it drops a little bit and you miss out? It's not a big deal. Like, wait for the best trades at the best setups, right? So in terms of put options, what I would say is, I would say wait for a bullish flip. And if you don't get the bullish flip, then just avoid it. Just avoid it. Or if you want to scalp at a lower level, that's on you, but use a tight stop. But I would just avoid it for the most part. But I would say wait for a bullish flip. And then the levels that I would be looking in terms of put options, I would be extremely meticulous because it is showing signs of a reversal. Stocks are already trying to rip and they recover green while SPY hasn't, but you can see it's moving up now during extended hours, right? This looks fucking bullish, and I don't want to fight this channel at the lows. I don't care if it drops a little bit more, especially when I think it will recover for the micro. So in terms of puts, you have to understand 3 days sitting at this channel is unhealthy for puts. It's make or fucking break, and the bears are not breaking it. And that was their day. Their true shot was today. If they can't do it by tomorrow, SPY's gonna fucking fly. So what I would say is, if you are bearish, wait for a bullish reversal. And then what I would do is I would go with the best levels. So your key levels in terms of short-term levels, you can say there's 3. There's one at 361, there's one at 363, and there's one at 364. The higher the better, and I would focus on 363 to 364 in terms of scalping puts. I don't think you can go wrong at 364. I genuinely believe that's going to be a good level to scalp puts on the first reaction, right? So what I'm telling you is, we're sitting towards, the bottom for 3 days in terms of the micro. SPY's already ripping up. You're going to see a nice bullish reversal if stocks are going green for day 2. And if the SPY is ripping above this level right here, this 357.70, if it turns it into support, man, you know what's ahead. Bullish reversal, right? And in terms of put options, if you're buying, I would wait to attempt for the bearish confirmations at resistance, which would be 363 to 364. And I think you should be more meticulous and wait for higher levels. That's my thoughts, and that's my overall analysis, right? I'm not someone who wants to try to make money at terrible levels where you're exposed to a lot of risk with very little reward. And the problem with puts at these levels is that is the issue. Now, that does not mean that it can't go lower, right? Because if we crack this 356.56 previous closing price and that reacts red, then yes, we will be on track to go to 355. If that cracks, we will be on track to go to 353. If that cracks, then we go to 350. And you could say, oh, you missed out on some opportunities. Like, no, I want to buy puts where puts are safe and where puts are printing. And if you look at this daily chart, puts are not printing on these 355 to 358 dips. They're just not. They're not fucking printing. This is where they're getting killed. 355, big upside potential. You can see right here, 357.70, big upside potential. 356.50, big upside potential. I'm not interested in crumbs, right? If I'm scalping, I could scalp for crumbs, but I want to at least get those crumbs when it's the right time to get those crumbs, where there's big upside potential with very little downside potential in terms of the trade that I'm taking. Now, I just need you to understand, even though I am a bullish thesis, just remember, if 356.56 cracks and reacts as a resistance, that is true strength that the bears will try to crack 355 and it will try to go under 353. So it doesn't matter if I'm bullish. What matters is how the SPY reacts to my key make it or break it levels. If it reacts bearish at my key level where I'm interested in buying calls, then I will sit on the sidelines, right? If I don't sit on the sidelines, then I'm breaking my rules, right? Don't break the rules. It has to react bullish, form the support, form the floor. That's my overall thoughts. That's my overall analysis. Now I'm going to break down the stocks. So make sure you guys are subscribed to the channel, stay up to date. Tesla. So I have two theories in terms of call options for tomorrow. So the first one is, stocks right now, you can see they had a small move down during extended hours, nothing really big. This is what you need to understand. I have two theories. The first theory is the previous closing price reacts bullish and it takes off. The second theory is it cracks below the previous closing price. There's a flash crash once that happens, and then that's the opportunity to dip buy calls, right? So there's two opportunities. Obviously, the second one would be the more potential lucrative opportunity where you're buying at a lower price. It's a lot safer. Couldn't really go wrong in that sense. So the deal is $317.24 is make or break. If that reacts as a resistance and it's struggling, it will see a sharp move to this 315 to 314. If that cracks, then we go back to 211. Now, if the previous closing price is looking strong and it's looking bullish and it's starting to break out, then overall, we should see a nice move up in stocks for day two green, and the SPY should start to follow. So it's going to be very important to study how stocks and the SPY are reacting at the previous closing price. So the theory is if it reacts bearish at the previous closing price, it will likely be a gift to buy into a panic at the key dip levels. So for SPY, that could be 353. For Tesla, that could be 211. Now, if it's reacting bullish, you can try to buy calls at the higher level, but just understand max risk. If I'm buying calls at 317 because it looks bullish, then I'm understanding that 215 is like my max risk. The next key level below is my max risk on calls. And then if I get stopped out, I can look to buy back at a much lower price with very little risk involved because I cut my loss quickly and I could size in a tiny bit bigger on the next one because it's at a much better level, right? So that's what I want to bring awareness to in terms of calls on Tesla. And your upside potential for that would be $224 with a clean break above 219. Now, in terms of AMD is basically like the inverse of SPY in a sense. So AMD has been closing towards the top end of resistance. SPY has been doing the inverse. It's been closing on the bottom end of support channel. Like I said, I think it's going to be a delayed reaction where stocks are setting up for a breakout, which is going to send SPY back up towards the higher end of the resistance. That's what I think. It doesn't matter what I think. It matters, how the market reacts to this zone, this 357.70 to 356.60. Like I said, if the bulls can't break like this, I understand we're low, but if the bulls can't break above it, then yeah, it's going to get ugly for the micro, and we'll see that new lower low. But it should follow up with a spike, in my opinion. But you have to use confirmation as well. And you need the buyers to show up with some volume, and you need them to break above this 357.70, because at the end of the day, we are in a bear market, and I don't like buying puts this low. But you do have to understand, like, it's make or fucking break, but just know what's printing. And I'm not going against the trend and what's printing. I'm not hoping for a key breakdown at 355, trying to make some money on puts. And that doesn't mean I'm blindly buying calls into dips either. I look for very specific reactions and confirmations, right? I just don't want to get trapped in puts. I mean, just think about it. Put yourself in the odds of the favor of the trade. If you're buying puts at 355 to 358, since here, you just lost multiple times in a row, and you missed out on great scalping opportunities to dip buy calls. So say I decide to buy calls tomorrow, it doesn't fucking matter if I lost, because if you were to play calls all of the other times where it was right, the win rate would not matter. You would be up substantially with the high win rate. You'd be up substantially because you played the trend, you played the overall move instead of hoping for a key breakdown. Puts have been printing at the top end of the channel. Calls have been printing at the bottom of the channel. I explained to you how to do it in terms of printing calls at the bottom of the channel. Focus on the trend. This isn't about being right or wrong. At some point, SPY is going to crack 355 or it's going to break out. At some point, there's going to be a breakdown or breakout. At some point, SPY is going to, break below this support, or it's going to have a reversal and break out. but it's trading in a channel. So don't fight the channel trying to predict that it's going to break out or break down. Just focus on trading the best setups at the best prices, right? Focus on where the win rate is at, where the money has been. You could see right here, if you were doing that the past 3 days, it's like the win rate doesn't matter. Your win rate would have been extremely high. You would have been getting in at very high reward, low risk trades. It doesn't matter if I buy a call and then I'm wrong here. Think about all the times I could have been right. So just put yourself in that situation of history repeating itself with that high win rate. That's what you want to be focusing on. So AMD, 3 days now, 3 bullish trend reversal candlesticks with a gap to fill above, right? Looks nice. For this one, same thing like I said with Tesla. So it's in the channel right now, and like I said, if it reacts bullish at previous closing price, then you could buy calls at the higher end with a tight stop towards like 357. And then if that cracks, you look to dip by at a much lower price at like 356.30. In terms of breakout levels, it would be on track for 359 to 359.30 to 359.50 overall, right? This is due for some sort of upside potential. It's a nice clean breakout chart. In terms of snow, this is very key. So snow's at key support. This is a very bullish trend reversal candlestick. Day 2 trying to go up and recover from key support. I like the candlestick. I like the chart. It looks bullish. Now, this is what I need you to understand. This is make or break. There's a gap to fill above that has been filled on snow. If you see it react as a resistance, it's going to be a hard, quick sell. If you see it break above, it's going to be extremely bullish. So $359.05. $359.05, a clean break above that and it reacts to support is super bullish, right? So remember, if you see it break above 159 and it reacts to support, it is super bullish. It's going to have a nice move up. Now, if this reacts as a resistance level, it starts selling off, then you have big downside potential. Look at this 30-minute candle, man, bloodbath to 147. So just understand, we are towards the higher end of the channel and calls have not been printing on breakouts. But if this whole theory works out where stocks are looking bullish at the previous closing price tomorrow and SPY's breaking above the 157.50, then I want you to pay attention to snow, because a break above 159, you see a breakout, it's consolidating above 159, right? So it's consolidating above 159, it's forming higher support, it's looking bullish. Buy calls, use a tight stop, set your mental stop towards like 157. If you get stopped out, then look to buy calls at a much lower level into the morning panic at 148. That would be the plan. I think panics will recover tomorrow overall. So use the bullish confirmations, like I said, and just understand, if snow goes under 158.53, then this will flip bearish and it will get ugly, right? So just understand that in terms of risk management. That's my thoughts. That's my overall analysis. Those are the top stocks that I'm watching. Snow, AMD, Tesla, and SPY. Those are going to be the top plays heading in tomorrow. I'm telling you, do not get fucking caught in a dip at the lows on puts, trying to be that guy where, oh, it cracked support, it had its breakdown. Well, guess what? Think about all the times where support didn't crack, support didn't crack, support didn't crack, support didn't crack. Suppose you played fucking puts every single time, right? Put yourself in the odds of the favor of the trade. Puts are not printing at 355 to 358. So just stay the fuck away from them. Who cares? At some point, it's going to break down. Who cares? Don't try to chase a move that is not in existence. Look at what's printing. Puts are printing at resistance. They're not printing at these dips. Now, that's not to say at some point, maybe they will, but we're not trying to predict shit. We're just reacting to what the market is telling us. And the market is telling us that we need to stay away from puts at the low end of the channel and just wait for call opportunities if it were to drop lower or if it looks bullish at our key make it or break level slightly higher. And just look at this, man. Look at how bearish this 30-minute candle looks. And then boom, bullish reversal, right? And look at again. Look at how bearish this 30-minute candle looks. Same one, same price, bullish reversal. Look at today. Same candlestick, same price on the 30-minute, SPY's up during extended hours. So just be cautious, man. It might look bearish, but don't be fooled. So that's my thoughts. That's my analysis. And again, for bearish thesis, this needs to stay under 356.56. It needs to crack 355. And if it does that, it goes to 353. Either way, if we hit lower lows, it'll likely recover. I personally don't think it's going to happen, but it doesn't matter. That doesn't matter. What matters is how the market reacts at my key levels and what the market is telling me. And right now, the market is telling me that this is trying to reverse. It's not putting in lower lows. It's trying to reverse. It looks bullish. It's chopping. you get some supply coming in, you get the volume, you get, the volume of buyers coming in, it's gonna fucking rocket. That's just how I see it. Now, again, that 157.70 is the true make or break it level, along with the previous closing price. That's your zone. Needs to react bullish in the zone to rocket. If it reacts bearish in the zone, then we test 355. If that cracks, then we go 353. If we go to 353, 350, I think it's going to blast off and recover like it's been doing. Lower lows, it recovers. Lower lows, recovers. Those lower lows have created the best squeeze opportunities. So if that occurs, it's going to be a gift for calls either way. So if I buy at a higher level, it gets stopped out, I'll just do that idea then. Or you just wait for the other idea. It's just, you got to see how it reacts in confirmations. Go with that. So yeah, that's my thoughts. That's my analysis. If you want to be a part of Trader Society, that's going to be the first link down below in the description. Once you join Trader Society, you get instant lifetime access to everything included within Trader Society, which includes risk management, position sizing, mindset training, all of the technical gap trading strategies that I've created, how to master price action both ways, how to master the SPY, how to master calls and put options. If you want to learn how to trade and become self-sufficient, this will be the best program for you. You can learn a lot within the video lesson library, the live streams that are also recorded. Within the Discord channel, the chat room, and the networking opportunities within the chat room, you'll be able to surround yourself with multiple traders who are trading with above 6 figures and are making multiple 5 figures a month. With that being said, the opportunity is there. If you want to learn more about it, you get instant lifetime access as soon as you join. That's going to be the first link down below in the description. And make sure you guys are subscribed to the channel. I will see you tomorrow live towards market open.